What's wrong with our financial system? I would like to ask 5 questions and give answers to them. Number 1, where does money come from? Very briefly, since we have a fairly educated audience here. Number 2, what causes the recurring boom and bust cycles and crises, which are, of course, recurring events. We've had over 100 just in the last 40 years worldwide. Thirdly, which policy has historically, based on empirical evidence, been most successful in avoiding these cycles and crises that we observe at high frequency? And number 4, what sort of structure of the banking sector has achieved the same result as that policy? And number 5, well, why are we in a recession in the UK? What is necessary to end it? So, well, we've established that the money comes from the banks, and they create, in the UK, 97% of the money supply. It's not the government, it's not even the central bank. The commercial banks are the creators of the money supply. How do they do that? So when someone takes out a loan, the bank simply pretends that the borrower has paid in the money as a deposit, when actually, of course, neither the borrower nor the bank nor anyone else has paid in the money or transferred it to the borrower's account. So what the bank does is it creates a fictitious deposit. And since banks are the accountants and run the settlement system of economic transactions, the accountants of the economy, nobody's able to tell the difference between real deposits and fictitious deposits. And obviously, as we know from aggregate data, the fictitious deposits therefore dominate and are 97% of the money supply. So especially speaking here, the Institute of Chartered Accountants, we believe the banks are honest accountants, but actually, of course, they're very creative accountants. What about other forms of the money supply? I mean, there are other forms of the money supply, such as, well, Bank of England notes, or in Scotland and Northern Ireland, paper money. Well, Scotland and Northern Ireland are special cases where commercial banks also issue paper money. In terms of size, that's very, very small. So the Bank of England issues roughly 3% of the money supply through its note issuance. And of course, that's a drop in the ocean when it comes to economic transactions, so it's tiny. What about this quantitative easing that we've been hearing about? This mainly creates another type of money, if you want. This is the central bank purchasing assets, resulting in banks accumulating credits at the central bank. These are the bank's reserves at the central bank. Now that is accounting money that stays at the central bank and never leaves the central bank. It doesn't circulate in the economy and therefore can't directly help the economy. So what we need is actually bank credit creation. That's the current system we have. We're entirely dependent on the bank's actions because they are the ones that create and allocate the money supply. They also decide who gets the money, the credit, and for what purpose. And that decision, of course, shapes the economic landscape. And funny enough, nobody's asked the banks to make sure that when they make this crucial decision, it's done in the right way for good things. No regulation asks banks to distinguish the use of the funds. In fact, there are regulations such as the Basel capital adequacy requirements, which punish banks for doing a lot of the good lending, for example, lending to productive SMEs, and encourage them and reward them for doing speculative lending, such as in the property market. So banks are the decision makers, and they haven't been told how to shape their decisions to serve the economy and its needs and the public good. They do it to well, maximize their profits and bonuses. But of course, that decision can lead to good and bad results, and sadly, more recently, we've seen more of the bad results. So the second question, what causes the recurring boom and bust cycles and crises? And that's been a big mystery in economics, because economics and finance has neglected the reality of bank credit creation. So they haven't been able to explain this puzzle. It's now over 20 years that I proposed a very simple model that could explain these cycles and quite a few other puzzles as well. You have to separate this money creation, the bank credit creation, into two streams. Money used for GDP transactions, which is money going into the real economy and determines GDP, and credit, bank credit used for financial transactions, which are not part of GDP, capital gains oriented, determining the asset prices and asset markets, and those are always unsustainable. So if you see those expanding, you know it's going to lead to problems. They're always unsustainable because there are no underlying there's no real generation of income gains that could service and repay the loans. All we have is capital gains, which are driven by the very credit creation. So it's a Ponzi scheme that is unsustainable, must end in tears. So if you separate credit creation into these streams, it's quite obvious what's happening. And very briefly, there's three scenarios. When credit is used for the real economy, even there's good and bad credit. You can either have the right-hand side, the green box, growth without inflation. When credit is used for productive purposes, there's more money creation, but it's used to create more goods and services, implement new technologies, increase productivity. So then, of course, you have no inflationary pressure because you've got more highly valued things for the money creation. And of course, inflation without growth is when credit is created by banks, used for GDP transactions, but not for investment, but for simply consumption. Consumer credit, you have money creation, you've got more demand for goods and services, but not more goods and services. Obviously, prices will go up. And then we have credit creation for non-GDP transactions, and that is financial asset credit creation, leading to the asset inflation and boom and bust cycles. Just very briefly, this, of course, is always preceding a crisis, this asset boom, and you see that this financial credit has increased. So the chart here shows financial credit in Japan rising from 15% of total credit to doubling 30% in 10 years. In the UK, credit for the real economy, and that includes mortgages to keep things simple, accounted for only 22% of total bank assets in the past decade. So the majority, of course, has not helped the real economy. So what you have is out of control financial credit, and that creates the crises. Here we have two examples, Ireland, Spain. I mean, there's a long list, of course, from Iceland to Greece we could show. And you see that when the blue line is ahead of the pink line, that is financial credits, the blue line is ahead of or total credit creation, therefore financial credit is ahead of GDP, we have the creation of asset bubbles, and that leads to these crises. Now, very briefly, finishing off the last two questions, which policy has historically been most successful in avoiding these cycles and crises? It is, and that's the historical record, a regime of credit guidance, whereby the central bank intervenes in bank credit decisions and tells them, well, don't give the bad credit, financial credit, give credit for productive purposes. And it's also been very successful because the central bank has the authority to regulate this vis-a-vis the banks, unlike the Treasury or Finance Ministry. Banks listen very carefully to what the central bank says because they need the central bank and its interbank market role to stay solvent, and therefore they listen. And this is, of course, the core of the East Asian economic miracle model, introduced into Asia by Japan, into Korea and Taiwan as well, and then copied by China, the system of credit guidance where the central bank restricts the bad credit and advances productive credit. Now, some people say, oh, credit allocation, that sounds like a Soviet state. No, not at all. You don't need micromanagement. You don't need to tell the banks exactly who to lend to. You just restrict the harmful stuff by saying no credit for financial speculation. I think we can't ban speculation, as some people propose, and I think that's impossible, and we don't need to. You don't need to ban speculation. You just ban bank credit creation for speculation. You don't allow banks access to this public sovereign prerogative of money creation, and you won't get the asset bubbles. Remember, credit is always allocated by banks anyway. So let's make sure it's allocated in a sensible way. The other possibility, of course, is state money, where banks are only intermediaries. Why should money be safer with a stockbroker than with a bank? It's a very odd system that we have. Finally, what structure of the banking sector has achieved the same result as credit guidance? Well, it's the key example is the structure of the German banking sector, where the 42.9% you see here are savings banks, and another 27% are cooperative banks. So 70% of banking is not-for-profit and lending for productive purposes. Then you don't need the credit guidance regime. That's another way of achieving this. And finally, why are we in a recession? Well, you've seen from the quantity theory of credit, and I'm glad that Finance Watch has accepted this. I mean, in academia, there continue to be struggles surrounding this, and there were also when Finance Watch was founded, but I'm glad that this approach has been adopted. Why are we in recession? Because there's not enough credit for GDP transactions. Very simple. That has been shrinking, the latest data, by 1.4%. Of March, monthly data, and therefore we can't expect nominal GDP to rise. So we need to expand that, and there's several ways to do that. The fastest would be, and that's my last sentence, to re-intermediate government borrowing by having Her Majesty's Treasury enter into loan contracts with the banks, because they're the creators of the money supply. There's more reading here. Thank you very much.